Quiet now, everybody. Quiet, listen to me. We're going to start a show. Now, some of you people have been with me before. You know it's going to be a tough grind. You're going to dance until your feet fall off. You're not able to stand up any longer. But we're going to have a show.
Welcome to the Pink Door Podcast.
It's great to be here.
Today is February 9, 2026. We are definitely shaking off the snow. I think I still have some on my boots. And we're grabbing a very hot coffee to look back at the full data set for January in Plymouth, Massachusetts, specifically the 02360 zip code.
And, January is usually kind of a sleepy month. So this data is, well, it's fascinating to analyze.
Right. That's what I always think. You picture January, the real estate market just hits the snooze button.
Yeah, exactly.
The holidays are over, bank accounts are hurting, and nobody wants to move in a blizzard. But looking at this stack of paper I have, this is the raw MLS data, the kind of stuff only agents usually see. It doesn't look sleepy at all. It looks frantic.
Frantic is a good word for it. Or maybe coiled, like a spring. It feels like a market that's trying to sprint while running on ice.
Yeah, there's this really weird tension I want to dig into. On one hand, you have all the classic signs of a seller's market, low inventory, high demand. But then I'm looking at these absolutely wild swings in pricing. You have list prices way up here, and then sold prices are way down here. It makes you scratch your head.
It does. And that's really our mission for this deep dive. We're not just going to read numbers off a spreadsheet. Anyone can do that.
Right.
We need to look at the velocity. How fast is the money actually moving, and the value. Because when you peel back the layers on Plymouth for January 2026, you see a town where there are absolutely opportunities, but speed.
Yeah.
Speed is everything.
Okay, so let's start with that big picture, the heat index, let's call it. I'm looking at this report, and it just says, in bold print, Plymouth is a seller's market. No question about it.
No ambiguity at all. The data's practically shouting it.
But I want to get into the why. The number that jumped right off the page at me was months of inventory. It says 1.58 months.
Yeah.
Now, I'm not an economist. I see 1.58 and I think, okay, a month and a half. Is that low? What's the baseline?
It's incredibly low. I mean, to give you some context, a balanced market, where buyers and sellers are sort of on equal footing.
Sure.
That's considered to be around 6 months of inventory. 6.
Oh, wow. So we are nowhere near balance.
We're not even in the same zip code as balance. Think of it like this. If every grocery store in Plymouth stopped getting deliveries today, the town would be completely sold out of houses in about 6 weeks. Every single shelf bare.
That is a terrifying image if you're a buyer.
It is. It creates that scarcity mindset.
Yeah.
When you see only 2 gallons of milk left on the shelf, you don't haggle on the price.
You just grab it.
You grab it and run. That's the energy of the market right now.
I did see one thing that confused me. The report says inventory actually went up a tiny bit, a 5.95% increase from last month. Doesn't that mean things are improving?
You have to be careful with percentages on small numbers. Yes, it's a 6% jump technically. But in reality, that might be 4 or 5 extra houses on the market compared to December.
Okay, so it's a blip.
It's a total blip. It's like finding a quarter on the sidewalk and saying your net worth is up. Technically true, but it doesn't change anything. Supply is still critically tight.
Okay, got it. So let's talk about the money, because this is where I really had my, wait, what? Moment with the data.
I have a feeling I know which 2 numbers you're looking at.
I'm looking at the median list price. So what sellers are asking, that's way up at $775,000.
Makes sound high.
But then I look at the median sold price, the checks that were actually written, and it's $585,000.
Right there with you.
It's a massive gap, nearly $200,000.
So help me out. What's happening? Are sellers just delusional? Are they pricing houses and then getting negotiated way down?
See, that's the natural conclusion. But it's not negotiation. And we know that because the data gives us another number. The sold to list price percentage is almost 99%.
98.8%. Yeah. So if it's not negotiation, why the huge gap? Think of it like a restaurant menu. Let's say a steakhouse has all these big, expensive steaks on the menu. The average price on the menu is, say, $50. That's your list price.
Okay, I'm with you.
But on a Tuesday night in January, maybe nobody ordered the big steak. Maybe everyone came in and just ordered the $20 burger.
Right.
So at the end of the night, the restaurant's median sold price is $20 because that's what people actually bought. The menu didn't change, though. The steaks are still there.
So the $775,000 a price is the steak. But in January, everyone was buying burgers.
Precisely. The high list price tells us that the new inventory and the stuff that's sitting, it's skewing expensive. Sellers are feeling ambitious. But the actual deals that closed in January, they happen in that more affordable, $400K to $600K range.
Which pulls the sold number way down.
Exactly. It's a mix issue, not a value issue.
Yeah.
It's not that a $775,000 house sold for $585,000. It's that the $585,000 houses were the ones getting sold.
That makes so much more sense because that 98.8% number.
That's the key. That tells you that once a price is agreed upon, sellers are getting it. There isn't a lot of haggling happening.
So that $200K gap isn't wiggle room for buyers.
Not at all. And that $775K list price, that's what you might call a risk premium. Sellers are pricing in appreciation that hasn't happened yet. A bit of a game of chicken.
And it looks like the buyers for the burgers aren't blinking. They're just buying.
They're buying whatever they can get.
Which brings us to speed, velocity. Who is moving and how fast? The report says the median days in RPR is 32 days.
32 days.
Now, maybe I'm just broken from the pandemic years, but 32 days feels kind of reasonable. It sounds like you have a month to look around.
It sounds civilized, sure, but averages can be so deceiving.
How so?
Well, if one overpriced house sits for a year and 10 great houses sell in one day, your average looks like a month. But for those 10 buyers, the market was instant.
I'm so glad you said that because when I dug into the specific sold properties, I found examples that they blow that average out of the water. I want to talk about Nine Stones, though.
Ah, yes. A very different kind of property.
This is not a starter home. It's huge. Over 5,000 square feet, 4 beds, 5 baths. It sold for $1,675,000.
A major sale for January, especially with rates where they are.
And here it is, the kicker. How long is it on the market?
I'm going to guess not 32 days.
1 day.
1 day.
Listed and gone in January in the snow.
And that right there is the proof. The idea that the market is slowing down or that high interest rates are killing demand. For premium turnkey inventory, the buyers are there and they are instant.
I guess if you're spending $1.6 million, the mortgage rate isn't your biggest worry.
Exactly. At that level, buyers are often less sensitive to those fluctuations. If the house is right, if it's the perfect steak, it's pull the trigger, no waiting.
But it wasn't just the luxury end. I looked at 39 Haven Road. Looks like a solid, regular family home. 3 beds, 2 baths. It sold for $789,900.
Which is a super competitive price point for a move-in ready place in Plymouth.
Time on market, 2 days.
2 days.
And then even lower, 11 Wampanoag Road. A smaller 2-bedroom place listed at $419,000. It went pending in, you guessed it, 2 days.
So you're seeing this tale of 2 markets hidden inside one average. You have some overpriced homes sitting, dragging that average up to 32. But the good stuff, whether it's a huge estate or a small starter home, it's gone in 48 hours.
That's terrifying for a buyer. It's like trying to find a parking spot at a Patriots game.
Yes.
If you see an opening and you hesitate for a second, someone else is already pulling in.
That is a perfect analogy. That 32 days stat gives you a false sense of security. You don't have 32 days. You barely have 32 hours.
So what's actually out there? If I'm a buyer driving around, what am I seeing? Because the variety is just wild.
It is. Plymouth is so big geographically, you get these huge swings.
I saw a listing for 7 Swamp Road. I have to admit, I love the name. It's very honest.
Very New England. No marketing spin there.
It's listed at $535,000, but it's small, just over 1,100 square feet. This seems to be the new entry-level price for a single-family home.
That's the reality. $500,000 is pretty much the starting point for a detached home that doesn't need a total gut job. That's the ticket price to get in the door.
And then on the complete opposite end, you have 6 John Alden Road, listed at $1,300,000. But the thing that shocked me is the size. It's only 1,367 square feet.
Right, almost the same size as the Swamp Road house, but more than double the price.
I mean, that's nearly $1,000 per square foot. What's the deal there?
Location, and lifestyle. On Alden Road, you're paying for the view, the proximity to the water, the country club. You're not buying the drywall, you're buying the prestige.
And then you compare that to something like 157 Lakeview Bealdy, which was listed around $350K. The price per square foot there is like $183.
Right, and for $183 a square foot, you're almost certainly buying a project or a much less desirable location. And that's why those Zillow estimates can be so wrong in a town like Plymouth.
You can't just use a formula.
No, you have to know if the street overlooks the ocean or the highway.
I also noticed some new construction popping up, which feels like a good sign. There's 14 Meadowbrook Drive active at around $730. and a Toll Brothers home at 23 Broadleaf pending at almost $885,000.
New construction is so vital right now. It's the relief valve for the market.
How so?
Well, when nobody wants to sell because they're sitting on a 3% mortgage rate, you get gridlock. You need builders to bring new stock to the market to keep prices from going completely insane. It gives buyers an alternative.
Right, to fighting over a 50-year-old house that needs a new roof.
Exactly.
So I want to pivot to something we call the hidden market, distressed properties.
Yes. It's easy to gloss over, but the report explicitly flagged several properties with foreclosure notices or complaints.
Yeah, I saw addresses like 5 McGuire Way, 4 Nook Road. It's easy to forget when you're talking about million-dollar sales that some people are still really struggling.
Absolutely. A hot market doesn't stop life from happening. Job loss, medical bills.
Yeah.
Financial stress doesn't care about the median list price.
Is there an opportunity there for buyers? Or is that predatory to ask?
It's not predatory, it's just a different market segment. For an investor or a buyer who has the patience for a really complex, often bureaucratic process, these are the value plays. You might get it for less, but you're paying for it with time and risk.
So you're definitely not moving in 32 days.
Oh, no. You might be closing in 6 months. It's hidden because most regular buyers who need a place to live now just scroll right past them.
Speaking of things people might scroll past, let's just touch on rentals. Not everyone's buying.
And the rental market is a perfect mirror of the sales market.
I saw that. There's a listing at 56 Tinker's Bluff for $4,800 a month.
Almost $5,000 a month. For a rental, that's a huge mortgage payment.
Who rents that?
Usually it's a specific niche, an executive relocating with a housing allowance, or maybe someone who just sold their home and is building a new one and needs a high-end place for a year.
And then you have 26 Boot Pond Road for $650 a month.
And there's the other end, workforce housing. But that gap from $1,650 to $4,800, it shows you the huge economic band in Plymouth. Inventory is tight at both ends.
Okay, so let's zoom out. The long view. We've talked list price, sold price. But what about actual value? If I own a home in Plymouth, did I make money or lose money in January?
This is maybe the most important distinction. Price is what you pay, value is what you get. The valuation model in the report puts the median estimated property value in Plymouth at $668,690.
Okay, $668K.
And that number is up 3.2% over the last year.
Well, wait a minute. We said the median sold price dropped to $585K. The headline would be home prices dropped 16%. I'd be panicking if I read that.
And this is why headlines are so dangerous. You'd think the market is crashing.
Yeah.
It is. Remember the steak and burger analogy?
Yeah.
The mix of homes sold changed. More burgers sold, which pulled the median price down.
Yeah.
But the value of any individual home, yours, mine, is actually ticking up slowly and steadily.
So my home didn't lose 16% of its equity last month.
No, not at all. You likely gained a tiny fraction of a percent. The volatility is in the transaction mix, not the asset value. That's a critical takeaway.
Right. That does make me feel better. And the total market volume, about $23.2 million in sales in January. That's a lot of money moving in the dead of winter.
It is. And a lot of that is in that $700K to $1 million bracket. That's the move-up buyer. That engine is running really hot.
So let's bring it all home. What's the final verdict on Plymouth in January 2026?
The verdict is, hurry up and wait.
That sounds frustrating.
It is. You wait for inventory to pop up because there's so little of it. You're just sitting there refreshing the app.
Right.
But the second it appears, you have to hurry. You have to be ready to go right now.
Because that parking spot is going to be gone.
Exactly. The window of opportunity for a good home is about 48 hours wide.
And here's a thought to leave everyone with. You have this median list price of $775K. The median estimated value is $668K. And the median sold price is $585K. That's a three-way disconnect.
It is. It's a really messy chart.
So, are sellers just getting too greedy? Are they pricing way over value and just hoping someone bites? Or is this a sign that a wave of more expensive inventory is about to hit the market that just hasn't closed yet?
That is the question to watch for February. If that list price stays high, but the sold price starts to creep up to meet it, we're in for an explosive spring. If the sold price stays low, sellers might be in for a rude awakening.
I am definitely going to be watching that gap next month. My final advice is, if you see a house you love, do not sleep on it. The stats say 32 days, but reality says 48 hours.
Couldn't agree more. Be ready to move.
If you have any questions about this episode, or if you are thinking about buying or selling a house anywhere on Boston's South Shore, from Southie to Sagamore, give Jim Aldred a call. He would love to speak with you. Jim believes that people in transition feel anxious about buying or selling a home, and he provides them with the guidance and security to help your family move on smoothly. Thanks for listening, and catch you on the next episode of the Pink Door Podcast.